Thanks for joining us again today. Guys, we got a really great one today. We know that a lot of buyers out there or potential homeowners that are trying to get a home are having a really rough time. I've seen that, I've got some people that have been out there for 6, 7 months, and I keep hearing the same thing. And I have to believe that some of it, there is a solution to it, or at least a way to be able to give you an edge. So I'm excited to tell you, I've got my partner, Regina Chen, joining us again today. Regina, like I said, she's just such an incredible realtor, and she's becoming quite the personality on YouTube too. She's got a great social media presence. And with that said, before I bring her on, please subscribe, like, and hit that bell. With that said, let's get started. Hey, Regina.
Hey, Barry. Thanks for having me back.
Of course. Yeah. Thanks for joining me again. Man, I got to tell you, every time something happens in history that I've never seen before, I always scratch my head and go, okay, well, I didn't see this coming. I remember I've been doing this for over 20 years. I remember when interest rates went below 6%, like we threw a freaking office party. It was like, I never thought, like, oh my God, interest rates are below 6%. When they went down under 4%, I thought to myself, maybe I don't know as much as I think I do. And I remember that the lowest I ever saw rates was like 3.25 until like this last couple of years. And now we know what's happening. I mean, we keep seeing these milestones being hit that we've never seen before. And one of the things that are plaguing people right now is just getting an offer accepted. I mean, this is beyond what some of us would call a seller's market. There's just so little inventory out there that we see, 30, 40 offers on one property, especially if it's, in that sweet spot in a really great neighborhood, like where Regina's farm is. In Irvine, it's just bananas, right? So we thought a great topic is how to have a winning offer. So with that said, let's give it over to Regina. Regina, say hi, and let's let everybody know what's on our minds.
Yes, so let's do this. Barry, you're right that the numbers of multiple offer, the bidding war is insane. It's that unseen, like unprecedented. I'll give you one example, like in Irvine, Portola Spring. That's a 3-level condo. It's beautiful, like professionally staged and all that. But I think that's the highest number so far I heard. They got 70 offers. I'm not joking. 70. Wow. So today I want to share. I know it's hard to be buyer. Like buyer fatigue is real, right? You've been just bidding and bidding everywhere you go, and you're lining up to get in to see the home. Today I just want to share that what I've been doing, helping my client to improve our chances so we can get our offer accepted. And let's jump right in. First things first, I want to talk about that in today's market, a pre-qualification or even a desk underwritten pre-approval is not good enough anymore. You want a fully underwritten and a letter from the lender. And well, Barry, that's your expertise. Can you help us further elaborate to help the audience better understand what I meant?
Absolutely. So guys, what Regina's talking about is a fully underwritten approval. And especially if you're not a loan officer, and even some realtors get confused by this, there's something that, we commonly refer to in the business as a pre-qualification. A pre-qualification is really somebody who gets issued or they speak to a loan officer and they tell them, oh, well, I think you're pre-qualified. You guys have probably gotten stuff in the mail that says you're pre-qualified. And then you call and they go, oh, well, that doesn't apply to you because, they find out all of the details about you. So we see this happen often with banks and credit unions, is that you walk into a bank or a credit union and you'll say something to the effect of, hi, I want to apply to buy a home. And then loan officer says, okay, awesome. Sit down. Well, hey, thanks for being a member of our credit union for the last 15 years. Wow, that's amazing. Thank you so much. Okay, let's take a look. Okay, we're going to have to pull your credit. Let's pull your credit. Great, you've got a great credit score. So how much money do you make? You know, what are you on salary, or how much money do you make every year? And you might say, well, I make $150,000. And they go, okay, great. Well, combined with your income and your credit score, I'm going to go ahead and I'm going to be able to issue you a pre-approval today. Now, a pre-approval, their version of a pre-approval and our version of a pre-approval are different. Our version of a pre-approval is where we actually then ask you to get us a complete application and to send us in all of your documentation. We want to do as much work up front as possible before we put our name on that pre-approval. Now, a conversation to me is a pre-qualification. I'm not pulling your credit. I just want to know about you. Then I tell you, hey, you know what, based on my conversation, I think that you're pre-qualified. Now we need to move to the pre-approval stage. And that's where we're going to fill out the application. We're going to get all the documentation in, and then I'm going to go over your file with my team. And in our origination software, there's something called a desktop underwriter. That is a program that's offered by Fannie Mae. Fannie Mae is a clearinghouse for all banks, credit unions, lenders, and they keep the market liquid, and they're the ones who write all the rules. So Fannie Mae has this program called Desktop Underwriter. Realtors refer to it as a DU approval. But what most people don't know about a desktop underwriter is that I can give a 3-year-old a DU approval because I'm manually typing in whatever I want, and whatever I type in, if I think that DU will take it, I can get a DU approval. We're not using your actual, pay from your pay stubs. We're not using your actual, well, I mean, a lot of loan officers will use that. I'm just trying to give you an example that with a desktop underwritten approval, you don't have to put in the actual numbers to get that approval. It can be misleading.
Right.
However, a good lender is going to go over all of your finances. They're going to go over, like, are you self-employed? How much of your employment is taxable income? Because as self-employed, you get a lot of write-offs. You're W-2'd. Okay, you work for somebody else, but maybe you haven't worked there for 2 years yet, and you're hourly. If you're on salary, how long have you been there? How much is your salary? If you have commissions, do you have 2 years worth of commissions? Because if you don't have 2 years worth of commissions, we cannot use that commissioned income. So that person that walked into a bank or a credit union, they might have told them that they make $150,000, but they didn't tell them that 60,000 of that is commission. And so that loan officer is issuing you this pre-approval. Maybe even they ran DU, that desktop underwriter, and even DU said that you're good to go. But because they didn't have all of your documentation, that DU approval doesn't mean anything. And any good loan officer out there knows that. Not all realtors know this. Now, a really good direct lender, and I'm saying that specifically, is going to send your file to an underwriter after they've issued their own pre-approval. Once the underwriter gets it, the underwriter will issue something called an underwritten conditional approval. And conditional just means that they might have some different things, like that you need to be in contract first. That could be one of the conditions. We need to see a clean title. That could be another condition. Maybe there's a big deposit in your bank statements that the underwriter just wants a letter of explanation, like, where did this $20,000 come from? But an underwritten conditional approval means the most important person at our company or any company has made a judgment that you are good to go as a borrower. You haven't found a place yet. This is called a TBD underwritten approval. Now, once you go into contract, we're going to have the underwriter look at it again and give you another approval. But that underwritten conditional approval allows you to be able to go compete with all cash offers. You see, one of the reasons why people really love this all cash offer is that they go, oh, well, they can close quickly. Well, guess what? When you have an underwritten conditional approval at our company and it's a conventional loan, here in Orange County, that's under $970,800, we can close in as little as 14 days. And on a
Yeah.
jumbo loan, 21 days. It just
Mhm.
depends on how complicated your file is. If you own 5 homes and you've got 3 companies and, it can add a little time to the process. But for the most part, once you have an underwritten conditional approval, it allows us to go in there with confidence and to be able to put a very shortened loan contingency. And some borrowers actually choose to remove their loan contingency. Once you have an underwritten, a conditional approval, a borrower might decide, you know what? I'm good. My lender has told me that we have an underwritten conditional approval and that I've been approved by an underwriter. I want to be more competitive and go in there and remove that condition. So an underwritten conditional approval, guys, is like one of the most important tools you can have in today's incredibly hot market. Does
Definitely,
that handle
definitely.
that?
Yeah, definitely. And I will also say that because it's so important. That's why we put the number one things we need to get it done, right? For
That's right.
one is that as a buyer, you want to know exactly I can afford to buy. You don't want a fluffy number and you go through all the trouble. Your offer got accepted. It's like, oh no,
That's right.
I can't do this. So
Mhm.
we don't want you to go through that kind of roller coaster and waste of your time. And second things like Barry says that this kind of approval letter has much weight than the pre-qual and all that. So when the listing agent, when they review all the offer, that gives us a leg up because we're solid. And the third piece that, like Barry said, we'll be able to close faster. In today's market, as a buyer, every little thing helps. We want to make sure on all front we are like up to the best, the highest standard to increase our chances. And
That's
that
right.
brings me to my second point is that I think you want to make sure you're working with a very experienced and very responsive lender who is very communicative. I'll tell you why, because I'm a listing agent myself too. A good listing agent, we need to do our due diligence. We receive all the offers, all the pre-approval, approve of fund, and all that. I personally call every lender to ask for detail because like Barry mentioned, a lot of realtors doesn't really understand what the financial of their client they're representing, and they don't really understand what is their pre-approval said. The makeup and all the details. So I always call the loan officer to ask very detailed questions. And from them, I can get more insight instead of just what realtor told me. Another piece is that if the communication is smooth and they are very on top of things, that is a good sign. Because when it comes to escrow, every bar, all the party involved plays a part to ensure a smooth, successful closing. So that's another reason I love working with Barry. They are Barry. I'll let you explain so the audience can get a better idea. So what does that mean? How does that make a difference for buyer as far as buyer's concerned?
Well, it makes a huge difference. And one of the things that Regina just said because I know I'm trying to put myself in the people that are watching this shoes. Like, why is closing fast important? Well, if you guys are out there looking for homes, you've probably seen this happen. You see a home and then all of a sudden it goes off market because they accepted an offer. And then all of a sudden, a week and a half later, it's back on the market again. Now, what happens is that you got to remember the person that's selling that house, they may be buying another house themselves, right? So now they've committed on the purchase of a new home and they're going to sell you their home. Now they've accepted an offer from somebody who's decided to pull out. So, and a lot of times the reason why they pull out is because they weren't really pre-approved to begin with. They wound up getting, one of these pre-qual, hybrid qualifications from, and guys, I don't want to throw banks and credit unions completely under the bus. There's a ton of banks and credit unions, loan officers out there who do a fabulous job. I'm just trying to tell you that this is widely known among real estate agents that you have to be very careful about the offer that you accept, because it isn't just about giving the most amount of money. We've had offers accepted many times where we weren't the highest offer, But because that realtor was so confident about the team that was representing the buyer, that they wound up going with our offer first. So imagine a house falls out of escrow. Now the buyer, the seller's buying another property. Now all of a sudden the sellers are freaking out because now they might lose that new home because they chose the wrong buyer. So then now the agent comes back and she goes back to the people that were interested and says, can you close quickly because we fell out of escrow and my seller needs somebody who can close quickly. Absolutely, we can close quickly. And in fact, the other thing that I might suggest you do is to check out our reputation. Because guys, we've been working on our reputation for decades. If you were to, and I'm not, let's just not talk about my team, the Krevoy team. I'm talking about whoever your lender is. You want to make sure you do your due diligence, because whatever you're seeing, the listing agent's looking at this too. Don't kid yourself. The world is wide open. Having a really great lender that is responsive, that picks up the phone on Saturday, that picks up the phone on Sunday at 10 a.m., you would think, wow, well, that's great that you do that. I mean, all lenders say that they do that. Well, they all say that they do it, not necessarily all do it. The reason why is because, man, things are moving quickly. I don't wait for an agent to call me. When Regina puts in an offer on a place, I call the listing agent. I want them to know that we've done all of our homework and we are absolutely confident in our abilities, and they can count on us. They can call me on Sunday at 10 a.m. if they have any questions. They can call me Saturday night at 6 p.m. So just having that open line of communication, is a very big deal.
Totally.
Now I'm gonna share something real quick before you jump on there. In fact, you know what? Before I do that, why don't you go ahead and finish your thought there, Regina? What did you think about what I just said?
Yeah, I love it, and you give like a very vivid explanation. People can understand that. And another, that there's several things we can do to make our offer stronger, make a winning offer. So the next things I want to share, I want to talk about contingency. I think it's important to shorten all the contingency. I know in today's market, a lot of buyer are writing very aggressive offer. They remove all contingency. I mean, to be honest, that'll be that buyer's discretion. But as a realtor, I always said that if you cannot remove all contingency, because there's pros and cons, you're running some kind of risk. That's a video for another time. But today I want to say at the minimum, you have to shorten your contingency. Because like Barry already talked about, when it comes to offer, there's many things that the seller, the listing agent are looking at, or they should consider. Not just the highest price. You want to have that certainty that they will be able to close it. And you want to shorten the time frame. That way, again, it just gives them peace of mind that, okay, I don't need to wait for too long to find out if this will close or not. Okay, so when it comes to contingency, there are three contingency. One is inspection, that's more in my field, and the other two will be appraisal and loan, that I'm gonna defer to Barry to cover the those latter two contingency. So in terms of inspection, nowadays it's pretty common seller as they only sell the home sold as is. In today's market, most of the time we probably have to accept that term, but it's very important for us to keep our inspection contingency. What's the difference? That means that let's take a step back. Inspection actually consists of more than just the physical home condition inspection. There's a lot of paperwork you want to review. So back to my point, for my client, I always advise still keep our inspection contingency. That way, we should still do our home diligence. Due diligence. We know that what's the current condition is. So you have a baseline understanding. You probably know, okay, maybe I need to do the floor. Maybe the pipe needs some repiping. You get an idea that, and you can decide after all those inspections, you have an idea that, okay, on top of my offer price, if I want to bring the house state to the condition I'm ready to move in, what's additional out-of-pocket money I need to be prepared for. Even though seller said it's sold as if, that is fine. At least you know that what's your total cost on top of holding the offer price and your repair or your project expense. That you have a total picture, then you can decide, do you want to move forward or not? even sold as it, that's fine. So that's what I meant, that no, even they ask for sold as is, what I see in the market, seller will still let you do your inspection, but they've been upfront about it. We're not going to give you repair or any credit, but that is okay. At least we will know what the total number going to look like. Then we can make our decision. Another thing is that we want to make it as short, the inspection contingency as short as possible, because that's what one of the big concern with seller, right? They give it the right to inspect, but they don't want to wait a dilly-dally too long. They waste their days on market. And if for whatever reason, the worst case scenario, if we decide to pull out, at least they're not wasting a lot of time with us. So that's the first portion in terms of inspection. And the part I'm talking about, the cost and all that, that's more for the specific physical home inspection portion. Another reason we should always keep our inspection is there are a lot of paperwork review. For example, you want to see the title report. You want to make sure, hey, we're actually talking to the guy we're planning to give the money to. They are actually the owner. Or is there someone else also on the title we're not aware of? Or is there any lien on it? That kind of things are very important. That's why I feel like you should keep a very short inspection contingency, but I don't recommend waiving it altogether. Other thing you want to look at is that, for example, in Irvine, most homes are in the association, homeowner association. You want to understand that HOA do or what they're planning to do. Is there a lot of deferred maintenance? You know that it's going to impact on your HOA. Are they about to increase, or is any litigation? How will that impact on you? So that's my part. I want to talk about that. We'll try to shorten our inspection contingency. Then Barry gonna walk us through about appraisal and loan contingency. What are they, and how Neo Team can help us shorten those contingency to make our offer more competitive.
Yeah. And, to Regina's point, I mean, I bought a home last year, and I can tell you that, and because I've been doing this for 20 years, there's always going to be a problem, you guys, with the home. I don't care if it's brand new, just been built. An inspector will come in and they'll find something wrong with it. But there are acceptable, things wrong with it. And then there are unacceptable things wrong with it, right? So like,
yes.
Having some stucco missing, underneath a sliding glass door, that's a stupid little fix, even if there's a little crack in a window, easy fix. If there's a crack in the foundation, that's a whole different story. And that, to Regina's point, that's why you want to make sure that you keep that inspection, because when the seller says, I don't, as is, they're just telling you, don't come to me and ask me to fix the stucco or the window or whatever. They know that if there's something major wrong, that you will wind up backing out of the contract. So you definitely agree with Regina there. As far as the appraisal goes, I'm going to pull up a slide here that I did for you guys. So here's the thing with appraisals, guys. Appraisals are, hold on. Okay, so here's the deal with appraisals. You have to, when you talk to people, especially people that aren't used to buying homes, they go on to one of these websites and they go, oh, wow, Zillow says it's worth, $950,000, and then they get scared to offer $1 million, or they get scared to offer $500,000, or I'm sorry, $1,050,000. And it's because, they're getting all this, the information that you're getting from these different aggregators online. It's usually dated information. They don't have the new sales in the system yet that just took place over the last week or two. I can tell you from my own experience that the house that I bought was $1,070,000 was what it was listed for. But we looked at the comps and we went, well, I think that they're lowballing it because they want to get a bunch of offers in. We think it will go for $1,150,000. So we offered $1,151,000. But the appraisal actually came in at $1,160,000. Now, I always say to my clients, what was the house worth? Was it worth $1,070,000? Because that's what it was listed for. Was it worth $1.151 million that I paid for it? Or was it worth $1.616 million? Well, even though the appraisal came back high, it's worth 1.151 million because that's what I paid for it. And the moment that I closed, it became worth what I paid for it. All my neighbors started using my house as the new comparable for the neighborhood.
Right.
So when we try to do with our clients is we try to really prepare you psychologically for what you're about to embark on. Not only do we want to get all that paperwork done in advance so we can close very quickly, we can get an underwritten approval, but we also want to prepare you for what happens if the appraisal comes in low. Because I can tell you, when I bought my house, I was prepared for that. If the appraisal came in low, I knew I was going to have to come in with more money because I'm a veteran. I'm a Marine Corps veteran, and I was using my VA loan. But if you're coming in with at least 10% down, we can implement something called an appraisal gap strategy. So if you go in there and you do put an offer on a house and the appraisal comes in a little bit less, we figured out a system to be able to allow you to come in with the same amount of money that you were coming in with before, keeping the same purchase price, and where your monthly payment does, if it does go up, it's by a few dollars, but you're not going to have to come in with more money. So I'm sharing my screen with you and I'm going to go over this real quick. So in this particular example, we took an $800,000 house. I hope you can see my cursor there. The client was coming in with $160,000, which made a loan amount of $640,000. Well, in this case, the appraisal came in low. It came in at $725,000. So what we did is we took $75,000 from that $160,000, and there's a little bit of an addition on there, which means that now they're coming in with an $81,000 down payment because we took 75 of that 160 to close this gap, right? So, but what we did is we added on, you guys probably have heard of PMI, which stands for private mortgage insurance. Well, PMI, most people think of PMI like, oh man, I don't want PMI because I'm going to have to make a monthly payment on it, and that's going to make my overall monthly payment higher. A lot of people don't realize that you don't have to have a monthly PMI payment. You can get mortgage insurance and you can pay for that mortgage insurance policy up front. Well, the way that we do it here is that we get a slightly better rate when we, believe it or not, when you're putting less than 20% down. It's not in the form of an interest rate, it's in the form of basis points that we can turn around and then give to our borrower to help them pay for their upfront mortgage insurance premium. And so they wind up putting up a little bit of money. We wind up putting in a little bit of money. In this case, this $75,000 closed the gap. The PMI upfront PMI policy cost us $3,671. So now the total cash to close for the buyer is actually less than it would have been, but their monthly payment only went up by a total of $18 a month. So even though the appraisal came in $75,000 less, the client is actually only paying $18 a month more without having to come in with any additional cash. Folks, this is a freaking mind blower. I can tell you, if you're confused, don't be embarrassed. It took me a while to really wrap my head around this. But this is a game changer, because now if you're already coming in with a substantial down payment, we've got this appraisal gap strategy. You can go in there and you can remove that appraisal contingency, which makes you a stronger buyer to that client, to the seller. And you're able to go in there and comfortably handle the situation if the appraisal comes in low. In a moving market like this, appraisals are often, like in my example that I just told you guys about, appraisals are coming in at the value that people are offering, even though they're offering much higher than what the asking price was, because it's a combination of maybe that the house was being priced low to create a buying frenzy. But if you've got a great realtor like Regina, she's coming in there and she's going, wait a minute. Yeah, this house is probably going to appraise for more than this is. But let's talk to Barry and let him go over the appraisal gap strategy, just in case it does come in a little low. That way you can go in with confidence. Does that make sense? Regina, did I
Yeah.
explain that
Yeah,
well enough?
if I may interject. So I want to talk about that, like Barry said, because we're in a rising market. Appraiser will take what's close in the past. They will probably factor in some, oh, is there any difference in terms of upgrade or lot size, any difference, do some adjustment. But those adjustment is not as significant as how fast the market moving. So most of the time, I would say probably like 90%, most homes in Irvine, you will have appraisal gap. One is because the market is rising so fast. And second reason that if you remember what I said, that most home close on average 5% higher than the list price. And the next seller will take that 1.05 become the new base. So every day is like coming up so fast. So it's most expected there will be appraisal gap. But what Barry explained here, I don't think it's I don't hear that. I think I first time hear it from Barry. Maybe I don't know. Maybe other lender they will be able to do that, but it's never like fully communicated or educated seller buyer. So if we know that when we write our offer, and we're gonna sit down as a group, because I am as a realtor, I'm gonna provide to show you, we're gonna put in a potential appraisal gap range there. Then we're gonna build it in our offer to write the strongest offer. And that's huge by removing appraisal gap in seller's eyes. That definitely puts you to the top line of the all those 20, 30 offers.
That's right. So to Regina's point, like it's not like we reinvented the wheel. A lot of lenders in the past have said, "Well, I'm just going to rework the numbers." The difference between what I just explained to you and another lender that is, reworking the numbers is that it's the way that we explain it to our clients, because that's the key. You have to have confidence. If you're out there right now trying to buy a home, you need to be confident in your abilities. You need to have a lender that's going over all of these different data points, because that is going to build confidence in you. And that confidence is going to translate into you getting an offer accepted. Now, I'm going to share one last thing, because I know that Regina's got to go, and so do I. But I wanted to share with you guys, the Krevoy Team execution, which is, probably, I don't think that we're the only ones out there that do an incredible job and that, can help you to get your offer accepted. But I can tell you that we have a 73% acceptance rate on our clients' offers. And the reason why isn't because I'm so great or, I explain everything great. It's a combination of everything, guys. We can close faster because every client that we have, we send them to underwriting for an underwritten conditional approval. We close more loans because we do so many loans. This is why we have the reputation that we have, because we don't cut any corners. We close a ton of loans. We make sure that when we issue a pre-approval, that it's a solid pre-approval. We communicate better. We have 32 different touch points that we have with our clients and the agents throughout the process. We also are more likely to close because we haven't lost a deal since it's been underwritten approved since 2014. Now, that all translates into this huge advantage that you have as one of our clients, as one of Regina's clients, is that everything that we just shared with you, we're going through multiple times a day. If you put in 4 offers, we're going to call 4 different listing agents and let them know what a great client you are. So, with that said, enough me puffing my chest out. Is there anything else that you want to share with everybody before we say goodbye here, Regina?
This is all great. I really appreciate your sharing. Before we head out, I wanna bring back one last comment in terms of that the appraisal gap strategy. I wanna be clear that one of the big benefit is that with that kind of a strategic session, sitting down with Barry, me, and the buyer, we take a proactive approach. We will sit down to know that we anticipate what kind of appraisal gap potentially is going to be, and depends on the specific property we writing an offer on. We will do that ahead of time before, we'd write it in our first offer. What difference would that make? Because instead of waiting for them counter everybody saying, okay, we're going to remove our appraisal. We want to put our strongest foot forward, because what would that do for us? Increase our chance. Maybe the seller will just scrap, will be the strongest offer. They don't counter anymore. Or in today's market is when you have 20 or 30, they don't counter everybody. If you don't do that up front, you're already out of the game. You are not at the table anymore. So we do that when we write an offer. That's why we always tailor, customize our offer. It's property specific. We're gonna agree, understand what's the appraisal range gonna be, and we're gonna write it in. We remove the appraisal contingency in our first offer. So I just want to highlight that, instead of take a passive approach that, oh, we'll just try this first. In today's market, you have to put your strongest offer the first time. And that way you might, best case scenario, our offer got accepted, but most likely case that at least we make the cut to have a chance to be countered. So that's why I'm thinking, I just want to point that out to buyer, probably like people just start buying. If you've been writing offer by now, you probably realize that there's no saving on a lot of people trying to say, okay, let's try this first and see how that goes. It's not going anywhere. Sorry.
A recipe for
The
losing
reality
at
is
home.
that you're out. We don't even get a counter. So like I said, every front of the offer is important, and not just the price and the time, all the contingency, and your team. You have to have a strong team, because when they're reviewing you, they're checking out all front. They don't want to work. People have a good reputation. They have a high volume, repeated success in the market, because they don't want to take any chance. They don't want to waste any time with those without affecting anybody. But I'm just trying to tell you, in seller's eyes, that's what they're looking for. So I want to thank Barry to bring me on today's episode, so we can share that what we see and what we believe, what it takes to make a winning offer in today's market.
That's right. Well, and thank you, Regina. And I want to wrap this up into a bow and just say this to you guys. Like, as a lender, I cannot tell you to remove your loan contingencies. I cannot tell you to remove your appraisal contingencies. I cannot tell you to move your inspection contingencies. And neither can Regina. It's not within our scope of what we do. It's not allowed for us to do that. So the way that we do that is we educate you to the point to where you feel comfortable doing all of these different things. If you're working with a realtor who has not gone through everything that Regina just talked about, if you're working with a lender who has not gone through everything that we just went over, how could you possibly be confident? You're going to be scared to death to remove because you're putting money on the table. Like, you're scared that maybe you could lose your money. Maybe you're scared that, the place is going to appraise for a lot less than what it was. Well, if you don't have hard facts, if you have nothing to go by, how can you make an intelligent decision? This is why we hang our hat on education. If you Google Barry Krevoy or the Krevoy Team, you'll see that we have over 130 something, or maybe 140 5-star reviews on there. And this is consistently what people talk about, is that we go out of our way to empower our clients by giving them education. If we feel like if we've given you the tools for you to be educated so you can make an intelligent decision, we have done our job, the first part of our job. The next part of our job is to knock it out of the park. So thank you so much, Regina, for being here. And man, I love talking to you, and I'm so excited to do more of this stuff, because I think that this was pretty valuable.
Totally. Thank you so much, Barry.
No problem. Guys, I hope everybody stays happy, healthy, and safe. Don't forget to subscribe, like, and hit that bell. Everybody take care.